Hello and welcome to the Wednesday check-in presented by the Gokhstein News Network. I am your host, Landy, and today is October 29th, 2025, and we are on the other side of the FOMC's rate decision. And I noted beforehand on Monday that we were likely going to see that 25 basis point cut. We did actually see that. So what we have to pay attention to now is structure, right? And we saw the rally into resistance at $116,000, right? We now are back down at a very crucial level. And in fact, we hit one of the crucial levels to the downside that I did talk about. So below 113 and 112, 113 and a half and 112, I'd said like we have to pay very close attention to 109. Below 109, we see that the structural higher low that is in place right here is in danger. It's definitely an area to pay attention to because this was the trend reversal setup and with the higher low on the close there, and then the rally to make a new high above the swing downtrend here at 114, almost 114.1, and then a rally right into the resistance at 116 there. Now, 109 was hit in yesterday's candle. In fact, here on spot price action, it was perfect. In fact, it hit $109,000 even to the penny. So again, that's, I say 109 and it hits it perfectly. I can claim that like I'm some savant and like this was all planned ahead of time. I got insider information. No, it's just that Bitcoin plays really, really cleanly. I've mentioned this many, many times. Bitcoin is one of the cleanest trading assets on the planet, and it loves to play the levels. So what does this mean? Well, we can see the setup here is actually really, really easy. We went from an expansive Bollinger Band set to compression within a range. If we get above the highs at 116, that's expansion, and this is on a closing basis, not just a swing or a wick. This is on a closing basis. We get above the highs at 116. Well, of course, maintaining the lows here, that'd be expansion to the upside. So on closes above around 116.1 to be exact here, got to get above the prior high or the most recent high at minimum. So 116.410, right? In that big zone between 116 and 118, then we'd get expansion up to the next level, which is right around or just above 118. It's about $2,000 above there. Nearly to a T there at 118.6. But 118 is also a level of interest in terms of support and resistance, obviously being under it, resistance, right? That would resolve in expansion into further overhead resistances. And then possibly continuation above there would be expansion back to the highs. And on the opposite side of that, really easy setup. Expansion below is going to occur on closes below the lower second. Now, there is an additional condition that needs to be met for an actual expansive move to ensue, and that would be not just closes below the lower second, but closes that can subsequently close below the 103.5 swing low here. That would be expansion, closing below the lower second would be expansion down to test the swing low. And any closes below that would be a confirmed expansion below it and hitting some of the further downside levels that we've talked about. We're going to talk about here in just a moment. I brought up the HTF or HFT, the high time frame liquidity. What is it called? HTF. Yeah, liquidity zones of interest, which is just untapped liquidity here on the dailies and weeklies for the highs and lows. So it's not the swing highs and lows, but at the most recent untapped areas that have not been hit. So just overhead would be yesterday's high, which would be the Wednesday session high. Of course, it's still Wednesday for me, but Bitcoin is living in the future here, and the Thursday candle is open. But the high here is at 113,690 from yesterday's candle. That is right there by the upper first standard deviation, trading above there, grabbing the liquidity above there. We could potentially see, rejections around there. It's right around the upper first. But realistically, any kind of even lower term time frame closes, we look to the next big area that's by the upper second, right around 116, where the upper second standard deviation is. of course, to that high at 116,410 now. To the downside, we see yesterday's low is pretty close at 109. And trading below there, well, look to the lower first, right around the 108 250 level, which, by the way, is a weekly close open. I'm gonna bring this up when I pull up the zones of interest for support and resistance. Anywhere below there, we're looking to the low and the lower second on a closing basis, essentially, right around 106 350, and that lower second just slightly below at the 105 6 to 7 area. Anywhere below there, we're trading back to the low. Any closes below there and the low, we're getting expansion to the downside, right? And of course, the yellow here is untested daily highs, or untested liquidity at the highs for the daily. The green is the weekly. The orange is the daily untested liquidity on the daily candle lows. The red is the weekly area, and you can see that the weekly area is from where the most recent weekly close open low side candle is, and I'll just point that out real quick to you, and we can move on. So it would be last week's low side has not been tested, right? Does it mean that these have to get tested? Not necessarily, but it's quite often that you will see them tested or come back to be retested, depending on market structure and environment, right? And in this case, there's really big areas right around, the highs and the lows, specifically the lower second on the weekly here, right around that weekly at 103.5. Don't want to see that dropped. If you're a bull, that's expansion to the next big downside area, of course, that we're going to talk about, that 101 to 98, and then further expansion below there, and the lower third standard deviation here, and capturing that liquidity and pushing down further would be the next big area that kind of comes in line here are these two lows that are right around the low side structure at 93.5 to the $89,000 swing, right? So essentially, the bulls really do this week need to hold up above 103.5 because they want to prevent expansion to the downside to test further downside, 101 to 98. You can take dailies at 95, 96, which is still a point of control for volume in the higher term time frames. And then, of course, 93.5 to 89, right? So many people have $90,000 kind of as a general area of interest. I would say 93.5 to 89 is a safe play. And of course, I mentioned this on Monday. That is right around the low here and the high, which is also a big fib number for me personally. It's 16.8% above, or a 1.168 or 16.8% above the prior highs. We're going to take a look at all of that in just a moment. Let's go ahead and turn this off and actually go back to the zones of interest here, right? Because it is very, very important to watch this. So we're going to look at the daily real quick, and then we'll compare that to the weeklies that I've been showing you fairly recently in the most recent videos in the past couple of weeks. So let's go back to the daily here, and let's just take a look at how things are lining up with the confluence between the bands and the areas of support and resistance for the zones of interest here. You saw that we came up into this 116 to 118 zone, rejected. Now, many are like, well, you see, it didn't beat out this lower high, but it did change swing trend structure, but this never locked in the lower high on a close, so it was a swing trend change. This is still another, in comparison to the closing high up here, this is a closing lower high with a higher high swing. Thus, we're seeing the bands compress, right? Very easy to identify right on that daily. This higher low right here, the structure at 105 is right where the lower second standard deviation is. Anywhere below there, we're getting expansion back to the low, right around this 1272 fib extension from the prior cycle. So the macro 1272 on log scale at 103, 650 or so. Anywhere below that, we're getting expansion down further. Can it save itself in the 102, 103.5 as long as it closes back up? Sure, but otherwise it's realistically targeting 101 to 98 down here, this big red zone. And bulls on the daily, it is danger. Danger below 109. We're going to be testing then down into this weekly and daily structure. Now, of course, this is a weekly higher low closing structure, which is right on this daily consolidation prior to breaking 112 and making new highs, right? We got the weekly higher low close. We have a weekly higher high and a higher low really right on top of each other. So if this big zone is lost between the higher high of this structure over here at the close at 109 to 112 and the higher low down here at 108 250 to 107 250, we start seeing like any kind of weekly closes below there. That's not good. Not good at all. It wouldn't take much to move down to that weekly lower second that I pointed out is right in line with that 103.5 area, right? And any closes below there, especially on the weekly, it's initiating expansion down into this area. And of course, we can get the edge for that on the daily coming into the weekly close. So definitely watch 109. Bulls want to see it hold up. And to get a higher low from here, let's just speculate. Let's say, for instance, that 109 holds on the low side, right? To get a higher low from here in like the Thursday candle, we would need to see a close back above 113,690. So pay very close attention on any moves back to the basis band, which is right on the dailies inside of this wider weekly. We have a bunch of daily highs here. This is going to be basically 111. It's high 110s by the basis band to 109.5. If you start to see, 111 broken back above in lower term timeframes, look right to 112. And then, if we start seeing price above 112 coming in towards the end of the Thursday candle, take a look right at that 113.5 where that upper first is. And see if we get a higher low close above that 113,690. That would likely initiate highs at minimum back to the closing side structure right around the 114,750, 115K. Anywhere above there, we're right back into that upper second where this last high came in, right around 116 to 118. Bulls want to see closes above, right, the 116 level to really start initiating moves on expansion into the further upside areas of resistance here at 118 and above. And this structure doesn't look good for the bulls right now, I'll be honest with you, coming into this compression, being in the bearish half of the bands, being inside of a major weekly at 109 to 112, but it's not over for them just yet. We have to see how the rest of this week plays out. And we can go ahead and turn this off and just take a look at that trending structure, right? And we're going to use the path tool. So we had the downtrend, right? So we had the lower low swing with the higher low close. This was a lower low, got a higher low right into a lower high, lower low. We got a lower high swing. We got a higher low close to a higher high swing and close up here, right? So we had the trend reversal setup confirmed on the 23rd, ran right to the resistance. And then we have so far an uptrending structure. Now, many are going to validly point out that this is actually a bearish structure after this big sell-off, getting a bit of a flag formation here that could potentially dump things further. But it's not over until it's over, right? It's not confirmed until it's confirmed. So the bulls still have a shot here around these two major weekly levels. Really cautious below 109. Just pay very close attention to the last higher low, right? Oops, sorry. Pay very close attention to the last higher low at 106,640 on a swing, and it's 107, you can call it 107.6. So 106.6 to 107.6, kind of an area of interest to pay attention to that the bulls don't want to see lost. If it is lost, we're testing the lows and very highly likely lower. So we also have the monthly close coming in. We're going to take a look real quick at the weekly again for the zones of interest, which are a little bit different than the daily, which are more granular, right? And I showed you how they line up with the Bollinger Band set here. But the weekly, of course, is going to be a little bit different up here, right? So we've got the weekly high side structure we've got basically the weekly high side and low side structure as this big red zone, right? So it is essentially that 112 all the way to the 102.5 for weeklies. And let's just pull it out to the weekly so you can see, right? So we have the high side structure from this high and this high encompasses this higher low. So this is a massive inflection point for price action. And the low side of this structure is going to be the very important area. So can Bitcoin save itself just below the lower second as long as it's closing above it, on the 1272 there? Yes. But it's very highly likely, even if it does get down there, that it's going to try to go for the liquidity in the next big zone, right? And needs to get above this close open here on the weekly, right around this lower high close between that 114.2 to 115.3 from the weekly perspective. And then it can, then we get down to the granular kind of zones of interest for the daily. But in terms of the weekly outlook here, it being a compression on the daily, if bulls see it resolve to the downside, then the bears are likely going to resolve the weekly to the downside, right? And that's the danger here when it comes to kind of timing for the cycle, which, by the way, isn't broken until we get past Q1 of next year, right? Because cycle timing for the macro top in Bitcoin would be between Q4 and Q1. We're in Q4. We're getting a consolidation around the highs. The daily's threatening the downside right now on a major weekly zone. And it's just something to pay very close attention to. So if you are, this time is different, kind of an outlook person, what you want to see is these areas to hold up, right? Otherwise, it starts looking pretty dangerous on longer time frames like the monthly. If Bitcoin does get expansion to the weekly to the downside. To the upside, bulls have a lot of work to do. Even above 118, 120 to 121 I've talked about, big area. Above there, 123 to 125, you ain't pushing shorts out anywhere below there. So you got to close above the high side to really start pushing them out past the, repositioning past the all-time high and higher. And then going for that 128 to 130, sorry. And that was, that's where the upper second standard deviation is. So it's a very clear, obvious setup here, right? And on the weekly, it might be very quick to play out, especially if it's to the downside, very likely going to quickly play the levels. To the upside, it could also be very quick, but I think it's going to be a little bit more of a slog for the bulls if they do choose to pick up the bid and hit those asks to the upside and start to push shorts out and get that expansion above the upper second to the highs and higher. Both are just as likely in this setup, even though it is very, very ugly for the bulls right now. It is still just a consolidation. I'm going to tell you, it's very, very ugly for the bulls. And we're even shaping up with this monthly candle looking very, very toppy and ugly in terms of the doji setup right now, unless we see a rally through to Friday. So Thursday into Friday rally. Even then, I think, it's still going to end up looking like an ugly doji, whether it's red or green. And this is important to understand. We're being governed by the top side, upper second and third standard deviations on the monthly. So even during this period where we came off of the bear market lows, we came in, we got the lower high into a higher low. This was the trend reversal setup on the macro, confirmed it. Bull market begins. We go and we make a new all-time high right there, just hugging that upper third standard deviation, coming back down, being revert, right back up to the upper second, upper third zone. And then now as we're getting really, really low volatility on the monthly in this kind of sideways and up grind, just repeatedly wicking and then hitting directly in this month's candle, that upper second standard deviation at 126. It's going to paint a picture that the bulls might, if they lose this low side, are going to, make a run for some of the structural levels over here, even on the monthly at 93.5 to the last higher low at 82.5 to that 74 420.69. That's really what it would look like. And I talked to many really brilliant traders and analysts on a pretty regular basis. Many are really talking about like the underperformance of Bitcoin versus the stock market, the underperformance of Bitcoin, this bull market versus gold. And I think that it's valid to bring up, but Bitcoin has gone up so much versus those versus indices and assets that a period of long form consolidation, which I've talked about quite a lot in the years that I've been doing this, Bitcoin has yet to really have its bull market versus gold, for instance, right? Bitcoin priced in gold, it's got its bull market structure, but it hasn't had its actual bull run, I should say, right? So, I mean, it's risen 410 million% versus gold. A little bit of consolidation is kind of in order, but one of the problems that many that track the Bitcoin versus gold trade, or Bitcoin denominated in gold or gold denominated in Bitcoin, either way you look at it, is this breakdown of trending structure with a lower high locked in, got a lower low, and then see where it kind of closes. And this is valid, but one of the bigger things that I really think is a little bit of consolidation, right? We haven't made significantly new highs versus gold's the Bitcoin gold pairing since the last cycle, right? So this is a macro consolidation, and in fact, you can see that, right? This is a macro consolidation against gold. Just like I've pointed out that on like the quarterly, this is a macro consolidation on the quarterly against fiat. Well, it's the same against gold. And there's only one way for Bitcoin to go in the longer term. Like it really depends on your view. Like you'd have to say that Bitcoin is going to exit the conversation on the nation at the nation state level. You'd have to say like, that we're going to get massive miner capitulation. We're going to get, a bunch of dumping and maybe Satoshi's wallet gets hacked and all the coins sold and stuff like that, to really say like, oh, we're going to resolve this macro consolidation to the downside. Like the fundamentals for emissions, circulating supply, and even the technicals for the chart here don't match that. It matches a consolidation prior to a breakout. There's really only one way, in my opinion, for Bitcoin to go, and that's up in its expansive phase. And I really don't entertain. I do look at it, but I'm not really seriously entertaining that downside. Would it be crazy if it happened? Sure, anything can happen, right? And we're going to see it in the charts well ahead of time. But for the Bitcoin versus gold to trade to the downside, we're looking at getting below, Bitcoin getting you 15 ounces of gold and then going down and really trading down to that lower second and below, right? Which would be an expansion to the downside for the quarterly. And what would that look like in fiat? Well, that would look like, Bitcoin below, 60K, breaking market structure on the monthly, getting down below 60K, and then going below, well, guess what? Versus fiat, it can't even really get an expansion to the downside in the way that we see expansion to the upside, right? We would have to be looking below $25,000 and more to really get that like serious expansion to the downside. The setup isn't even there because it's the upper and lower second. The lower second hasn't even populated yet for Bitcoin, as it's too young on the quarterly time frame for that. But could it feasibly happen? Could you see narratives that happen that would occur if that were the case, and like speculation around what those narratives would be? Sure, yeah, absolutely. Do I think that they're realistic and that's realistically what's going to happen? It's a very, very, very slim likelihood. We're moving forward in adoption of crypto and Bitcoin, especially leading the charge, not backwards, right? So it really comes down to fundamental viewpoints. And the way that the largest asset under management companies in the world, the way that the world is shifting its view on Bitcoin is to be that of like gold, right? You've heard the Larry Finks of the world and many others talk about it being a store of value and a hedge against inflation. They're putting it in the same basket, and they're advising those who sell their products, the brokers who sell their products, to pitch it that way, because that's the way they view it, is like gold, like a precious metal, that has that's easier to transact with, right? And in that case, if they're putting it in that same bucket, which and we have nation state adoption really right around the corner. I mean, the Bitcoin Act will eventually get passed. It's just a matter of when. Means that we could potentially see shallower bear markets, and then that resolution to the upside on the macro timeframes that would kick off massive upside, kind of like priming the pump. For an upside move, a catch-up trade, if you will, versus gold and indices, as Bitcoin has essentially been consolidating against them since the 2021 highs, right? So I've floated this out there before, pretty early in this bull market transitionary period, even as far back as looking at the higher low into the higher high structure for Bitcoin, coming in and prior to that all-time high prior to the halving, right? I've been talking about this for a very, very, very long time. And in fact, the interesting thing here is on the 6 month, because Bitcoin is still young, right? It's still young. Bitcoin on the 6 month is interesting from a volatility perspective, because it started to get its volatility breakout, but it hasn't actually confirmed it yet for a 6 month, which takes years to play out. It's only got a little bit of history on the 6 months, so I would lean more on the quarterly. And seeing that expansion, you can easily tell that the expansion would occur by that lower first standard deviation dropping off the chart like it has every other cycle. Once it starts to get its close above that upper first, upper second, we haven't seen that yet. And what would it take for it to do that? Closes above the upper second, that can then run the $148,000, $150,000 and start closing above. That would be the expansion to the upside on the quarterly. So that's where, the debate right now is, if you're in the cycle, the Bitcoin cycle theory side of the conversation, you're looking at this being the top around Q4 to Q1, and for this expansion not to play out. And if that were the case, and we do go into a consolidation structure or a bear market structure, I do feel as though it would be a fairly shallow one in comparison to prior cycles. Everyone's looking for the, everybody's been talking about the diminishing returns to the upside, but rarely talk about the diminishing returns to the downside from the peak, which I do think is going to start to occur now that we have spot ETF players and traditional market players in the market for Bitcoin. They understand the value. They actually have been they've been speaking in the way that many Bitcoiners have talked about for many years. Obviously not in exactly the way that many Bitcoiners want them to talk, but they are towing the line and then actually following through with advising those portfolio managers who are buying those spot ETFs and the way that they are moving. So I think we're going forward, not backwards. We still have, it remains to be seen, obviously, where Bitcoin goes from here. This week is going to be a very, very important week for Bitcoin, especially considering the compression on the daily and the weekly here. And I think as we enter into November, we got to keep eyes on, this compression to the next expansion. All right. Don't get shaken out of your conviction in Bitcoin because I'm giving you both sides of it. understand that if you're really in this in crypto, and you don't own Bitcoin and it goes down and you don't take the opportunity to buy it, you're missing out. Okay, you're missing out. Everyone always wants Bitcoin um, when it's on the highs, and always talking about how they missed those lows. Well, you better be prepared to buy the lows when they are obviously coming in. And Bitcoin is in a downtrend. And right now, it's in a trendless structure on the weekly. And we are awaiting the next trending move. So if it's to the downside, have that dry powder. Pick your spots, right? Pick your spots to DCA in and get positioned, and always keep some left over for the potential quote unquote bear market low or the bearish structure low. If you're a long-term investor, I feel as though, in many years' time, we're going to see such significantly higher prices that even this structure at the highs is going to look like a deal. So I don't think there's any bad time to be in Bitcoin, but you should pick your spots, and you shouldn't just buy the rips. You should be buying the dips, especially if you're going to DCA. And if you want to get educated on charts, keep watching me and others who are in this space that do a very good job of keeping people informed on, macro cycle structure and where things could potentially go and what areas of interest they are interested in. And maybe, get in when there is a bear market and really start to accumulate, right? But either way, I hope that you all had a wonderful run up to the midweek, and that you're keeping your eyes very open about the obvious setup here on Bitcoin's chart this week. And I'm going to wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. I will be back here on Friday breaking down the monthly close. And, I don't know if we're going to get confirmation on Friday or by Friday of any of the local structure. Keep your eyes peeled in the Thursday into Friday sessions for any kind of confirmation of some of the things that I talked about earlier on the daily. And then I'll get you prepped for what my thoughts are regarding structure on the monthly and headed into the weekly close. Please like and share this out there. I know this was a longer one, but there's a lot of fear right now. And there's a lot of, there's also, in addition to a lot of fear, there's also a lot of the other side of that, which is the other extreme is like, nope, you should be buying here right now. You should be slamming that bid because it's going to go higher forever. Up only, up only, up only. And that's just not the way that things trade. I'm in favor of cheaper sats because there's only so many. So I don't care if price goes down. And that's it. Take care of yourselves. I'll be back at you on Friday. Have fun and stay safe. Landy out. Take care.